So welcome everybody to the meeting of the Carbon and Environmental Markets Community of Practice. So for anyone who's new, I'm Rachel Clark and I'm the knowledge broker for Carbon and Environmental Markets with NRM Regions Australia. I'd like to acknowledge the traditional owners of the land I'm on today, who are the Ngunnawal and Ngambri people, and pay my respects to elders past and present, wherever you're calling in from today. And I'd also really particularly like to welcome any First Nations people that are joining the meeting. I'd like to welcome our knowledge topic speaker, who is Tom Picton-Warlow from Mobile Global, who will be presenting shortly. So as I said, we're going to just quickly run through the agenda and have a few introductions before we move into the knowledge topic. So I'd like to welcome also anyone who's new today. So I'll ask everyone in a second, if you're new, please unmute yourself and introduce yourself and what region you're joining us from. But I'm going to pick on somebody first, and the first person who is new to the COP today that I'm going to pick on is Matt Hardy, who has just started in our Regions Australia last week, who's going to be leading the Environmental Markets Participation Initiative. So Matt, if you could just introduce yourself to the COP, that would be wonderful, and then we'll call for other people that we haven't met before.
Thanks, Rachel. Yes, hi everyone. Yeah, very fresh at NRM Regions Australia. As Rachel said, started last week working on the Environmental Markets Participation Initiative. I come with a background in private land conservation, environmental markets, and yeah, a whole bunch of other stuff. But looking forward to hearing lots of things from you and learning more about this space from the NRM region side. Thanks.
Thanks, Matt. And I have mentioned the Environmental Markets Participation Initiative, which is a bit of a mouthful, a couple of times in the COP meetings, I think, just in terms of it's going to be the sort of big research project that will also provide opportunities for regional NRM organisations to trial some of the approaches to engagement that might be useful in engaging farmers in new environmental markets. So there'll be lots more for Matt to say in the future. Yeah, welcome, Matt. Now, is there anybody else that's new to the COP today that might like to unmute and say hello? Hi, Lenny.
Rachel. Yeah, I'm new as well. Lena Knudsen here. I joined Health, Land and Water back in May, and I'm in the Sustainable Agriculture team now, so I'm very excited about that. And yeah, I'm new to this group, but I have been on the Queensland Carbon COP for a while now, so I know a little bit about what will be going on, but I'm keen to join you guys.
You'll know a lot and bring that real ag perspective, Lenny, so welcome and thanks for joining us. I think Ellie was about to unmute, weren't you? I could see you getting motivated. Thanks.
Yes, my name is Ellie Pratt. I've just joined the Northern and North Landscape Board as the Climate Adaptation Facilitator. So it's a brand new role, so I'm still sort of working out where I fit in, but we'll be working across the nature repair market and carbon market spaces as well.
All right, thanks, Ellie. Now, has somebody else unmuted? I'm just looking across the sea. Somebody want to pipe up? Or is that who we've got that's new today? That might be it. Well, welcome everybody, and thanks new people for introducing yourselves to the group. So for your benefit, particularly the way we run the COP is, I'll just go through the agenda in a moment, but I think the key thing to note is that it's a safe place where you should feel comfortable to raise your hand and ask any question. We're a very diverse group in terms of technical knowledge and skills, and the whole purpose of the COP is to build knowledge and capacity among regional NRM organisations. So if you don't feel brave enough to ask a question straight up in the room, you can always also put it in the chat. So welcome. Also note, I am recording the session, so we always try and do this so that we can make any presentations available afterwards. Typically we make them available publicly where we can, and otherwise the link is always sent to the COP. So I just saw that somebody else introduced themselves in the in the chat, so welcome. So we're going to start pushing on with the agenda because we've got a fair bit to get through today. So as I said, it's going to be the knowledge topic first. So we'll have Tom in a minute. Thanks, Tom. So if you want to get ready to share your slides again, Tom, that would be great. That'll be followed by regional and jurisdictional updates. So for everyone that's been here before, you know, we go around the room and try and get information on new projects or significant projects in the carbon farming or environmental market space. Sometimes we share resources through this. So if you think there's something that might be of benefit to the group, please raise it in this bit. I typically pick on people that are seasoned attendees by jurisdiction, but I will not pick on new people unless you're the only one in the group. And then after we do this around the room, I've got some national updates, and I've actually got a few that I need to let the public know about today. So we'll try and keep on time. So on that note, we will go to our knowledge topic. So Tom, if you can share your slides again. So as I said, so Tom Picton-Warlow from Mobile Global is our knowledge topic presenter. So Tom's the project manager for a research project being run through the University of Western Australia on exploring the potential for combining natural capital and agricultural production landscapes into an equity investment type. And the project is aiming to establish a baseline understanding of attitudes towards productive natural capital and nature as assets. So this might include the identification of knowledge gaps, risk perceptions, and perceptions towards nature repair. And also the probability of farmers integrating natural capital into their farm business. It also looks at different pathways for farmers to collaborate as groups. I heard Tom talking about this project at a SARI forum on valuing sustainability earlier in the year, and it sounded like a really interesting and novel approach to incorporate multiple land uses, as well as trying to really manage for the desired and future land use outcomes as I suppose there's these big transitions occurring across Australian agricultural landscapes at the moment. And it's looking to sort of, I suppose, harness this in a fairer and more bottom-up way. And the project also involves some of the WA NRM organisations. So welcome, Tom, and we're all really looking forward to hearing about the project.
Thanks, Rachel, much appreciated. I notice Tibby Tuckett's on the call as well. So Tibby was at the presentation that we gave in Northam last week, so it's good to see her. Yeah, so hello, my name's Tom Picton-Warlow, and thank you, Rachel, for the introduction. You'll note here with the slide, we've got a QR code, which is a survey link. So my request is that if any of you know, and you obviously do work with farmers, landowners, then this is a survey for them. So I'd encourage if you are able to share that with growers, farmers, landowners in your area, because it helps us with our survey of this fascinating area, which is about a natural capital production landscape. So just a bit of background on the project. It's funded by the Australian Government Future Drought Fund, and it's been initiated through the Southwest WA Drought Resilience Adoption and Innovation Hub. It's a research project with University of Western Australia and ECU, and my company is helping with that in collaboration with UWA. So fundamentally, the exciting thing is that it's the opportunity to speak to investors and speak to growers and pastoralists and landowners, Aboriginal groups around what is natural capital, and then discussing with them what it could be and what it could become. So very exciting topic, and something that obviously with the Nature Positive Summit coming up in a few weeks' time, it's very topical. So yeah, I think that, as you said, Rachel, this has been recorded, so that QR code, as I said, if you know of any farmers who would be interested in filling that in, that'd be great. So on to the presentation itself, and what we'll start with is just do an overview. So what I'll be covering is what is natural capital and why is it useful, research into what we term natural capital production landscape. So we'll be going through a few definitions for you, and then looking at what we've found with grower, pastoralist, landowner and investor viewpoints and interest, and really exploring what does good look like when you talk to a grower, and what does good look like when you talk to an investor. What are what do they envisage with this concept? And that's what we're exploring as part of the research. So we're looking at investor viewpoints and interests, and then getting there from here. So as part of this project, there's been continuous improvement. So some of the feedback on the initial presentations was, well, sounds great, natural capital and the definitions that you've provided and the investors that you've spoken with, but then, you know, how are we going to get there from here? So that's when I go into talking about the concept of natural capital plus agriculture and what it might look like going forward, what sort of vehicle it could become in a financial sense. And then some natural capital production landscape examples for you, and then finally some next steps in conclusion. So if we go into the definitions, what is natural capital? It's plants, animals, air, energy, water, soils, minerals that provide benefits to people and are used by industries, households and government. So it's a comprehensive view. It includes biotic and abiotic. So it's very, very large in its scale and its meaning. So it's important to realise that when we talk about natural capital, that's the context I'm talking about it within, which is very broad. And then we have natural capital accounting. So it's the mechanism, natural capital accounting is the mechanism to account for the value of natural capital assets, and it provides the physical and economic measurements of stocks of natural capital and the flows of ecosystem services, so the services that natural capital assets provide. And then a bit of background for those that aren't already aware of this, comes through the UN, or the main framework is the UN System of Environmental Economic Accounting, or SEA, and that's been around since 1993, but it's really strengthened in the last 4 years and is now the default standard for natural capital measurement. And I'll go into a bit of that, including, most excitingly, the ABS is going to release a set of reports in next year, which will be based on natural capital. So then the economic value of ecosystem services, as you can imagine, is huge. It varies. It's in the trillions, and it's essentially we're fundamentally dependent on nature. There's all sorts of different discussions around how dependent we are. I'd say we're probably more 100% than 50%, but there are standards that says we're 50%. But anyway, it's important. That's the basic rule, and it's very valuable. Within that economic value, we have the ecosystem services, which are provisioning, regulating, cultural. So it's comprehensive to what we exist and how we function as humanity, essentially. Then there's, within natural capital accounting, there's various frameworks, and one that I'd mention is accounting for nature, that I'm familiar with. So it's, as I said, the systematically measuring and reporting on natural capital resources. Accounting for nature is one framework, and its methodologies that cover things like native vegetation, soil, sediment, water, ecosystem, flora, fauna, and basically the comprehensive set of methodologies that they provide. Also important is data. So we all often expect that data will suddenly appear and that'll be great, but it's not always the case. So we're constantly, when we talk about natural capital with investors, they're always very concerned about the data that they can access and the quality of the data and the trustworthiness of that data. So government data in this instance is very important, and so I've taken some example here from DPIRD in Western Australia, which has provided some excellent resources over the years as far as government reporting on data in the regions across Western Australia. In this case, we can see soils data, which is absolutely fundamental for natural capital, as well as obviously primary production. Then it's also worth mentioning the excellent work the CSIRO do with the ecosystem state and transition services reports that they did. And the one that I presented on last week is the wheat belt, which I'll use here again today because it is an excellent report. And if any of you haven't had the chance to look at it, I'd recommend that you have a look at this particular report on the wheat belt. It was released in June by Anna Richards and her team, and I think it's excellent and well worth looking at if you want to see data It's comprehensive, and it gives you a really good grounding in what natural capital data represents. You can see here within their study, it's a comprehensive guide across the wheat belt area of Western Australia with ecosystem accounting within it. So I just thought I'd mention that because it is important when we talk about natural capital, and in particular from an investor side, they're always questioning methodologies, standards and data. Now, a few more definitions for you. Natural capital production landscape, that it refers to a large area, a regional scale, a catchment scale that integrates primary production such as farming with the sustainable management of nature. So this is when we talk about this project with the investors and with the growers and the stakeholders, we're talking about a large scale. It's a production landscape, so it includes production, it includes farming within it. So it's a comprehensive view of a whole area at a regional scale. So that's very important. That's the fundamental grounding in this project. Natural asset companies are then companies that are based on natural capital and use natural capital accounting to define and describe their works or achievements and their results. Asset class is a group of financial instruments that behave similarly in the marketplace and are subject to the same laws and regulations. And when we spoke to investors, they at times mentioned that natural capital represents to them, or is an analogy to the way that infrastructure was considered 30 years ago, in that it's like a big nature infrastructure project that is now just being considered as an asset class. And certainly that's coming through quite strongly at the moment. Now, that's important because it can be an asset within a company, within an investable entity as an investment vehicle, which has assets, instruments and products that are used to generate income or increase wealth. So there are the fundamental definitions. So bear that in mind, the NCPL, when I refer to it, that's what I'm talking about. So how can natural asset companies in production landscape enable sustainable benefits from natural resources while creating positive and long-term benefits for both people and nature is what we're looking at. Our project aims to understand WA grower perspectives, but we can obviously extend that. But obviously we've only had so much time and budget to be able to do that in this instance. But we're looking at perspectives in managing natural resources in agricultural systems and their attitudes towards listing nature as an asset class. And then we're also looking to understand investor interest in nature capital or natural capital within regional scale agricultural production systems. So we've done about 24 hours of interviews with investors, probably do another 10 by the end of the project because it's so fascinating. I thought I'd do about 9 to begin with, but it's such an important area. And we've covered a broad cross-section of investors from superannuation funds, pension funds, retail banks, investment banks, indexes, and essentially a whole cross-section, including insurers, of the potential investors in this thing, natural capital. So very important and very important to understand their thinking, which I'll go through briefly as part of this presentation. So why study natural production landscapes? We want to explore the potential for a listed entity that defines nature as an asset class and recognises the value of ecosystem services across a regional scale to help growers and landowners and community to drive multidimensional growth across economic, environmental and social cultural areas. And we want to engage agricultural stakeholders in Western Australia, but as I said, it could become Australia, and financial actors nationally and internationally to capitalise on future nature markets while also improving sustainability, profitability and resilience on farm. So here's the big formula. So if you remember one thing today, just remember this. It's natural capital plus agriculture equals reduced risk with diversified returns. That's the formula for everyone to remember today. So store it away because it's really important. This is the one that really helps drive everything. And it's fundamental to the way that we're thinking about things in this project. So the other part and the other thing that I want you to remember today is collaboration. That's a really important concept that underpins this whole project, because at a regional scale, you have to collaborate, and you've got many different stakeholders, including grower groups, communities, investors, Aboriginal groups that will need to collaborate and participate and potentially have equity in sustainable growth by leveraging these ecosystem services within the regional landscapes. And to that, you can include energy, water, primary production, carbon and biodiversity, biodiscovery, soil, native vegetation, cultural and social benefits. So it's a really exciting thing. Of course, it may not be achievable for everyone. It may not be for everyone, but that's the purpose of this project, is to research that and to check what people's thinking is and their level of interest. And so I'm a very, very poor artist, but thank goodness for AI, I was able to tell it to envisage these group of growers and community members sitting around with a regional scale map talking about what they could potentially do together as a collaboration to look at all sorts of things. And there's an example which I think, Rachel, you provided us, which is in Hay in New South Wales. So I'll just go into that in a minute. But the important thing about this is that if you can combine everything together as a group, as an asset, so you could then become potentially an aggregator of biodiversity and carbon credits as assets within an equity structure, which is kind of exciting, really, because you become the aggregator. And then as something that resonates very strongly with farmers is that they then have a controlling interest on these credits, which is incredibly important for them for succession, but also for their ongoing farming practice. So that's really important. That plus they have exposure to the value of those carbon and biodiversity credits in future. They're not just selling them now on today's market at today's prices. They're holding on to them as an equity asset that they have an interest in and a controlling interest of. So very, very important concepts here, and ones that we've been discussing with and we'll continue to discuss with the primary producers as we go along. But from an NRM's perspective, that is also of interest as well, because you can then look at all sorts of ways as an aggregator or have an interest in providing services to these aggregated assets over your whole region, which is kind of really exciting. So I think that's certainly something I wanted to raise at today's meeting and presentation. So then, as I mentioned, Rachel gave us this example, which is really very related to what I've just been discussing, is with the Hay Plain in New South Wales. They've basically got together, and as my very poor AI diagram has shown, but it's a similar concept, they've gathered around as a community and said, right, let's work something out. The Hay Shire Council's working with the community to set the goals for long-term benefits, affordable energy for the whole town. There's a whole ABC, I suppose, report on this, which you can have a look at. But the important thing is that they have been able to collaborate to look at sharing power the town, and also get revenue. So the farmers and stakeholders are receiving revenue over a long period of time consistently. So that really helps their business, and it reduces their variance and variability, and reduces their risk of operations as well, because they've got consistency of cash flow. So a very good example there, and one that is happening right now. So when you look at it from a grower perspective, from an NRM perspective, in the case of today's presentation, we really need to look at the question of, what does good look like to you? What does it mean to you when we talk about this? We've got all these ecosystem services. It's clearly going to enable potentially an economic empowerment, sustainable agriculture, most importantly, environmental resilience against drought and floods and so on. And then the social and cultural well-being, taking the example of Hay. There's global economic impact in that you will have access to markets, future markets, by adopting good natural capital practice. You'll be seen as attractive. You'll be able to take leverage from investment paradigm shifts. As I said, nature as a investment vehicle, as an infrastructure project, has been considered as an asset going forward by the investment markets. Long-term sustainability, so that's the beauty of treating nature as an asset. Big infrastructure project, you've got these long-term patient capital these projects, ideally, when you think about it, infrastructure would last for 10, 15, 20 years. That is exactly the way that nature works. So you've got this fit with long-term sustainability. And most importantly, it's a public good as well as private benefit. So it's got, from a government perspective, it's very attractive. If you do things on scale, across a regional scale, you're going to have a significant public good as well as providing private benefit. So that's where government's going to be very interested in participating, or at least enabling this market going forward. Now, when you look at the various viewpoints around this, you'll see that from a grower or primary production or landowner perspective, they'll see natural capital as an addition to what they already have. And then when you look at it from an investor perspective, what they'll see is an enhanced value proposition to what they have at the moment. And that's very important. So when, for instance, we have spoken to some of the superannuation funds, they are very reticent about agriculture. In fact, that less than 1% of a superannuation fund's investment is in agriculture at the moment, which is extraordinary. But there you go. They just see it as too volatile. But if you can take my magic formula of natural capital plus agriculture equals less risk, less volatility, we can address that and say, well, let's educate, let's sit down with these superannuation funds and say, if we can incorporate natural capital strongly at a regional scale, we can start to enhance value to the point that it becomes attractive to them to actually start to invest more than their less than 1% at the moment of their funds, which is, $3.9 trillion. So it's a significant milestone if we can start to get them, and I think they do, and I'll go into this in a minute, but they do want to invest, but that's the reasoning that we got from some of them, was that it's just too volatile and not on their objectives. So anyway, that's the way that you have different viewpoints around what natural capital represents. Then when we spoke to the growers, and I've just got some core themes that we have, having had the opportunity to speak to about 24 of them, and as I say, we'll be extending that. But some themes that are coming through are they want tangible outcomes. So really, they want something that is they can touch and they can see the returns, they can see the ecosystem services working, they can see this thing actually being legitimate and actually viewable. And to that, there's probably an opportunity for more pilots, because they see that there's not at the moment that many pilots in existence in a big, large-scale natural capital context. There's so they see that when we explained the concept around the landscape scale or the regional scale, they saw benefits in the way that they think about things. So when you go to an insurer to insure your car or insure your house, it doesn't matter how good your house is or how good your car is. Basically, they're going to insure you on where you live. So it's that scale, the regional scale of the suburb or wherever you are will be bound to where your rate resides. So to that extent, the regional scale fits very well with the way they like to measure things and how they assess value. So once again, that's an important context of the value of doing a regional scale in the way that the financial investment markets work, including the insurers and retail banks, for instance. Then there's challenges for standards, data, measurements and indices. I've already touched on that. So that's really the importance of the data out there and the excellent work that's been done by government and CSIRO. We really need to leverage that, because to the investors, that's very important to have independent, objectively measured, high quality data coming from government is very important. The grower buy-in and credit for contribution. So in fact, quite a few of the investors that we interviewed were coming from a farming background. So they're immediately saying, well, look, the growers are probably going to be extremely sceptical. They may not, be entirely on board with this and are very dubious about it. So really what they were thinking is then, well, what's in it for the growers? What credit are they going to get for their contribution? Often growers feel that they've done a whole lot of work in natural capital and that's ignored. So it's like the carbon credits of old, they'll just take it from now going forward rather than looking at 20 years of amazing work that they've done previously. So to a large extent, the natural capital asset addresses that particular issue. And so it's the way of ensuring that there's some sort of credit for contribution going forward, and also for past behaviour as well, is very important. And the investors recognise that. There's varying attitudes to risk. So the investors will vary depending on who they are. Some will think that it would be great to stack all the ecosystem services together and go for it across a big, asset-based approach. Or some of them say, well, look, each of these different types of ecosystem services require different skills and project management capabilities, and there's different levels of risk within them. Therefore, we do one at a time over a period of time, and then that will be the most satisfactory approach. So you're going to get different attitudes to risk, and that's all about the different investors. And that's why we've decided to speak to a broad cross-section, because it's very important to understand that it's not a one-stop shop. There's a whole lot of different types of investment that you can get. And for instance, the superannuation funds is very attractive in the sense that if you can get their criteria and meet their criteria, they're going to be long-term patient capital, which is exactly what natural capital needs. It needs that long-term view to enable the project to succeed. The project and programs are preferable. That's the way they think. They think about very constrained scope. They want to make sure that everything is measurable, that there's a budget, that there's a timeline, that there's milestones, and there's deliverables. So they want to see it managed in that way. The investment vehicle, they're often thinking about how it could look. Would it be private equity? Would it be public equity? And I'll go into a bit of that in a minute. And then government policy. So one of the biggest concerns they have is government changing policy, or a new government's elected and they completely alter whatever was in place before. So that's seen as a key risk with such long-term projects around natural capital. And then within themselves, education, resourcing and capability. So they're only just coming to terms with ESG, and it's a huge thing for them to manage themselves, but then over the top comes natural capital. So there's challenges there within their own resourcing and capabilities to keep up with what's going on in the market and to understand and educate themselves. So that was interesting as well, as far as the way that they're seeing themselves and their ability to invest. So quickly, there's a few more, bit more feedback from them that you can see. So it's a ticket to play means that these are, say, with the European investors, if you don't properly manage biodiversity in your projects going forward, you're just going to miss out on investment. It's as simple as that. That's how strict they're becoming. As I mentioned before, infrastructure as an asset class 30 years ago is analogous to what the natural capital asset class is now. So it's emerging as a new asset class, and it's of that scale. When considering why not doing, the lack of what good looks like is an issue. So basically, they've intellectually justified why they don't invest because they haven't gone in and tangibly done things, and they see and they know that they want to start somewhere. But there's a lack of natural capital projects that are operational and profitable. So that's a bit of a bind, I suppose. They're struggling to see what's tangible and able to be monetised. So that's a key thinking that they have. So this may be able to be addressed by the project type pilot approach. And for investment to make sense, it needs to be big, addressable, liquid and understandable. So that's their sort of thinking, and it fits well within our regional scale multiple ecosystem services approach. And the objectives of projects, as I mentioned, need to be clearly and narrowly defined. But here's the catch. Investors worldwide are increasingly recognising the urgent need to address the loss of natural capital as a systemic risk for their investment portfolio. So not doing anything is not good enough, because you've got this risk that is systemic to what they already have. So they're really thinking, how are they going to just work through this, because they know they need to act. So there's a sense of urgency and need in their thinking. So a few more points just quickly is scale, as I've mentioned, format, how are we going to represent this complexity of natural systems in a financial product. A lot of people talk about fungibility, which I think is potentially a bit of a well, how, the question is, well, how then is nature fungible? Because it's not, that's pretty much non-fungible. So why is that a problem? Because I'd see that, there is room for non-fungible type assets as well as fungible. So I think we need to think about this a bit more, especially when we look at the complexity of natural systems. You can't just shoehorn everything into just being fungible and the same, because it's just not the way that nature works. It's bound to be non-fungible in many aspects. And then fragmentation. So one of the key issues they have is, and this is obviously to the point I'm making around collaboration and the need for it, there's often many different landowners, stakeholders in a primary production region. So that's a big problem. Trying to get collaboration is going to be significantly difficult, but then, hey, you've done it. So, it's not impossible, but it's going to differ, isn't it, between different areas and different groups and different stakeholders. But it's important to note that there is fragmentation. So lack of consistent data and metrics, we've covered that. It's difficult to compare and benchmark natural capital projects, and collaboration, as I mentioned, is required across many different groups, including government and NGOs. A few examples here. How am I going for time, Rachel?
We are running a bit short on time, Tom.
Okay.
So it's sort of a good point to kind of.
I'll just, shall I do 5 more minutes, or is that okay?
Well, you can probably do a couple more minutes, but we do want to, I want to have at least 5 minutes for questions. So the sooner you wrap up, the more time for questions.
Okay, yeah, let's do that. Quickly then, how getting there from here. There's the intrinsic exchange group. Please look that up. It's an excellent example, although it sadly didn't come to fruition, mainly because there was a misunderstanding about what it was intended to do. It's not a wilding exercise as we've got in our project. It's a production landscape. So we still intend to have production enabled and nurtured and strengthened through this process of adding natural capital. So that's an important theme, but they have essentially a roadmap about how you could get to listing a natural capital natural asset company. That was on the New York Stock Exchange, and they will probably do that later, but their intention was to do that this year, but it didn't happen. So there's, I suppose, some examples there between public and private, how you would do that. The advantages of going public is that you are potentially able to get on sustainability indices, and then you'll have significant interest from ETFs. So that's a really important point. Look at where we're getting from here is the TNFD. You can see that emerging. As I mentioned with the ABS, they're adopting the CICES 5.2 for the first comprehensive set of national ecosystem accounts for Australia next year. So that's very exciting and very important. So it's happening. This thing is coming. You can see that when you have a traditional company set of accounts, balance sheet, profit and loss and cash flow, with a new after regional natural capital and ecosystem services have been added, you can see that there's a whole lot more assets that are appearing and cash flow that is appearing as well. So that's a very important concept as well. The issues, I won't go into that. You can see that when we talk about natural capital production landscapes, there are benefits for primary production in water retention, hydration, temperature regulation, soil erosion reduction, biodiversity, and soil health as an example. And those will vary in the reduction of variability depending where you are, but it will be generally quite positive and very strong. And then to cover off a couple of examples for you, tangible examples, because we like that. This is an example from the Sewell Farm in Wongan Hills. They managed to reclaim 30 hectares of land, which was saline, by basically putting in a desal plant, dropping the water table and using that fresh water for horticulture and farming inputs. So an amazing story, and I'd recommend that you have a look at that if you haven't seen that before. And then Plasmolite, which is a way to use that fresh water with energy and with nitrogen out of the air, of which is 70%, to create fertiliser on farm and fuel on farm, which is very exciting, but just another example of monetisation of energy on farm. And there's another couple of amazing AI diagrams or drawings that I did. And then just quickly, accounting for nature, just showing an example in Western Australia. The importance of biodiscovery in the rangelands is 80% of Australia with 30 to 40% of biodiversity, so a very exciting opportunity, I believe. And then just quickly, the workshops are in play. I've got one this week, Southern Forests, and then Southwest NRM, 23rd of October, and a few more. But basically, we're underway. It's very exciting. And at the end, we'll have a couple of reports which we'll be able to publish out to you. And I hope you enjoy the presentation, what we've covered. Remember the formula, natural capital plus agriculture, remember collaboration, and remember from an NRM perspective, what does good look like to you for natural capital is a really important question that you need to give consideration. And that's all from me. Thank you. I'll just stop sharing.
All right. Thanks, Tom. Okay, have we got some questions for Tom? We did have one from Yolanda. I'm not sure if you'll know the answer, given I don't know that you've been involved in the Hay project, but Yolanda's asked, with the Hay initiative, you know, the one that was in the ABC that I sent through. So was there any funding? Do you know if there was any funding to get it going? How did it start? Who was the driver for that approach?
I'm not sure. I mean, I just saw what you provided, and I thought that was quite inspiring. I just love the fact that it was the council leading, it was community led, and that the growers and landowners got involved and have come to some sort of agreement. I'm not sure of the specifics around it, but I think it just, I suppose, is a high level illustration of what could be potentially done at a regional scale. And the fact that they can power the town is really awesome. You know, that's a great benefit to the community. And I wanted to, I suppose, emphasise that result, because obviously everyone says, oh, there's a private benefit to the landowners and the growers, et cetera, et cetera. But in this case, there's also a public good that was able to be achieved, which I think is really important. It's important to stress that it is possible and should be done that way, ideally.
Yeah. So from what I understand from the example that was in the ABC, it looked like it was being driven by the local government, but I mean, that's a Helen Haynes era. Helen Haynes is electorate as well, and it looked like she'd been involved, and obviously that sort of whole Indi movement has had a lot of sort of, you know, grassroots experience of those in terms of getting those independent candidates elected. So I suspect there are a lot of drivers for that initiative, and I understand it is being followed. The Next Economy, I think, is sort of doing some research around it, and we'll be publishing and, or, you know, sort of explaining how it's happened. So it was actually one that I've been trying to follow up with it in the background, and something we might look at in the future. Particularly, it'd be interesting to understand what involvement the regional NRM had. I think it would be somewhere Western NRM. I don't know if we've got anyone from LLS that's online that knows anything about the involvement of the NRM there. But my colleague Rachel Morgan has sort of been a little bit on the periphery of that project or that work through her role at the University of Melbourne. So I'm hoping to be able to get some more insights into how the NRM was involved and where they might go from there. Are there more questions for Tom? If you do have a question, please feel free to just unmute and go for it, because I've got people on two screens, and so it might take me a minute just to see who's got their hand up. While we're waiting for other people to come forward, Tom, one of the questions that I had that I feel like I sort of always and still have is, and I just want to check my understanding of this. So is the idea that people come together in some sort of a mutual arrangement, like, you know, it's a co-op or whatever it is. I don't understand the financial mechanism precisely, but the idea is that investors are investing, and I suppose that they're going to be able to have a return on investment because do they have a value in the land, or is it just through the co-op, or sort of what's the pathway for their return? Is it through is it as part of the co-op, and is the return through, or are they actually buying into land? What are they doing?
Yeah, good question. So this is one of the most important aspects of it, is that when you talk to growers, that's the key thing. They're going to give away something, like they give away carbon at the moment is an
Mm.
example, because they are literally giving away the rights to that carbon. So in fact, that was the inspiration for some of this project, was to think about, well, how could you enable them to give away some, value upside potentially, but still maintain control and over the carbon, over that asset, and hold it as an asset within some sort of structure that they have a controlling interest of. That was the sort of inspiration to that. So yes, in answer to your question, they are giving away, like the carbon, they're giving away the rights, but in my, I suppose, thinking, they don't need to give away control, which is really important. So there'd be ways that you would look at to enable them in a constitution, say, within the company, that would outline exactly how it would work, and how perhaps they have a controlling interest and they have voting rights within shares, within equities. There's all sorts of ways that you can structure it. But the important thing is to try and address that issue of when, sure, they're going to give away something, but what they get in return is something, it's some is greater, it's greater than the sum of its parts type story, because they can't do this themselves. They can't do, like the hay farmers, for instance, is a good example, because individually they couldn't do it. The scale to power a town is going to probably be beyond them, or they may want to do, and it'd be interesting to look at the way that the hay project has evolved insofar as there's been some sort of agreement across a group that they have arranged to have solar and wind put across the hay area, which would be it looks to be on some of their land, but they've worked out some agreement where the benefits are shared accordingly, and the individual farmer is getting cash flow that they otherwise couldn't have necessarily got themselves, because you've got power. They could have, for instance, they could have set up the wind and solar on their property and gone, right, what do we do next? And it's like, well, there's no buyers, so what are you going to do? It's that monetization. In the case of hay, the town has said, yeah, we want to power the whole town, plus we've got these other markets, or, you're opening up this energy source to be able to profit from it in a way that you couldn't individually do yourself. So that's, I suppose, the example. Same with some of the examples with desal. It's all about trying to think on a scale and a collaboration that you individually yourself couldn't do, and you need the capital to do it. So, it's working out that as much as you're giving away something, you're ideally getting more back in return. But the important thing is you're not necessarily giving away that control to some aggregator necessarily. And that's the important thing, in that it could be, for instance, an equity holding that you have as a succession instrument. So you basically hand that down into your inheritors. And that's very important for, investors as well as the actual growers themselves.
Thanks, Tom. Did anyone else have a question before we let Tom go?
I just had a question as well. Can you hear me?
Yes.
Yeah.
Yes, great. I was just sort of interested in that when you talk about that landscape approach. So with the energy, for example, it's sort of easy. Every farmer does the same thing. But then when we look at something like a soil enhancement over region or natural assets in terms of integrating native vegetation, if you look at it at a landscape scale, then how would you see it in terms of the methodology of measuring? Yep, we could sort of do the same measurements, but the actual implementation, every farmer might be doing something else or having a different sort of level of how much they then improve their soils. And how can we then say we're actually changing the entire region when everyone might be doing? Is it okay if everyone does it slightly different, or do they need to do the same thing?
Yeah, good question. This is one of the challenges with this, is collaboration. How closely are they prepared to collaborate? Some farmers might go, look, I'll only do this much. I'm not prepared to do the rest because I just don't believe it, or I don't think it's in my interest to do that. So, I suppose the concept is it's an idealistic one. It's perfection as you see it, but then within that, that's why it's a research project, is to go and talk to the growers and the communities and the Aboriginal groups and just get their thinking about this thing. But most importantly, to show them the concept in the first place. Like when I was up at, just to give you a good example, I was up at Gascoyne Junction. I stood on the Gascoyne River, which is the biggest river in WA, and I was just amazed at how big it is. It wasn't flowing at that time, that was a few weeks ago, but just this incredible power of a river. And now, of course, that 850 kilometres upstream is where it all begins. And if you can start to do, in a perfect world, you have an agreement amongst the pastoralists and the traditional owners and the councils and the NRMs together, and the farmers, pastoralists, to manage that using this sort of entity. You could then basically have a way to manage this incredibly powerful thing, but it would take 10 years to do, at least, maybe 15, because it takes so long to build up on that particular landscape. It's so fragile. But, if you can, and can have the outcome of a rehydrated Gascoyne catchment, that is significant, because the amount of soil erosion is going to be significantly reduced, and then that takes away the risk to Coral Bay and Shark Bay to the south. But just on that scale, you've also got improvements in productivity, but you've also been able to restore the resilience of the biodiversity on a scale that you couldn't achieve with one individual farmer or pastoralist. So it's that ability to try and, I suppose, in answer to your question, try and at least get what good looks like to, in this case, would be to at least control the erosion, to enable a rehydration of a scale that would at least start to turn the dial from an investor's perspective, and to protect from the downstream erosion risk that that river presents. And, when it last flooded, it took away the pub and the petrol station. It's got incredible power behind it. So, but that doesn't really even touch on the erosion and the degradation of the land that is a consequence of those sort of events. But it's trying to, I suppose, work together as a team across a regional scale. It's a bit like the land care programs in the 90s, except this time around it's with private investment as well as government, which makes it kind of exciting, because you then think, could this be done in perpetuity as a group going forward, rather than, obviously, Landcare had its funding and it finished, and then it was sadly not continued necessarily consistently after that. It's really trying to build something that's self-perpetuating and able to generate and stand on its own 2 feet in the long term.
We are going to have to leave it there, Tom. We are running a little bit short on time. I saw Karen's dropped another question into the chat. But in terms of answering your question, Karen, sorry, I think, as I said, we have run out of time. I'm going to ask, Tom, would you have to send through your slides for me to send out to the group? Is that all right? Because there was a lot of detail in some of them, and also there's some really good examples. I know people want the time to look at afterwards.
Yeah, I can do that.
So if that's okay, that would be great.
Yeah, so energy, water, soil, native vegetation, carbon, biodiversity, biodiscovery, yes. Well, that's an asset. In fact, one of the when I was up at Gascoyne Junction, one of the pastoralists who's just got a 300,000 hectare property or leasehold just east of Walloona actually addressed the Senate, the WA Senate, to say, hey, what I'm sitting on is so valuable with biodiversity. It's incredible, and it's the most resilient, beautiful, flora fauna that you could possibly imagine. And he was very passionate about it because it is endemic, it's unique, and it's just so incredibly strong. Its seeds will sit there for 5 or 6 years, and then suddenly the first rainfall, it'll be sprouting up. And seeing that incredible strength of biodiversity would inevitably, I think, lend into some sort of biodiscovery. And I think there's a big opportunity with Aboriginal groups as well, with their knowledge, to leverage some sort of reward for that as well. So I think that's a very exciting area.
Thanks, Tom. It's obvious that you're really passionate about the work that you're doing and the, really wide opportunities that it has for regional communities and First Nations people, and also, I suppose, preservation and celebration of different natural capital assets. So thanks so much for joining us.